Good morning, everybody. It is Wednesday, December 1st, 2021. Just finishing out the month of November, so we're going to jump to our ultra high timeframes and take a look at what they have to say now that we have those closed quarterly and monthly bars. Real quickly, just want to go over yesterday. Yesterday, we were expecting some type of bullish push. However, we said we really needed to get above and stay above 46.29, which was about 50% of the previous day. So coming out of the open right up near 46.29, we did push a little bit further, maybe 10, 12, 13 points beyond 46.29. And when we came up and retested that high up here right off our eye level, interestingly, we came right into that. And then we got this really glaring bearish divergence on basically every time frame. However, in real time, we could only really see the setup on the 10-minute, the 3-minute, and below. And so when we came back up into that area and I saw all the bearish signals, I told everybody in the trade room it was now time to basically sell the market because something really obvious was happening. And so we came up, we tested that level, got all the bearish signals, and then started to look for shorts on the way down there, and obviously never stayed above 46.29. We got the peak above. We got the attempt to push above that high that we from before that, and then we failed. And so although we did have that bullish bias, we weren't able to hold basically our first line in the sand there at 46.29, and we had all those bearish signals, and so it ended up selling off just shortly after the open and then going sideways into the close. And that kind of brought us here into the overnight session. We did get a bounce, and we're going to talk about where we bounced here. Pretty obvious little area. Bounced right off there, and now we've got this attempt to come up and test the highs of yesterday. So for now, yes, the highs of the regular trading hours of yesterday, and then obviously the highs of yesterday from the Globex session were all the way up at 46.6750 up there. So let's go ahead and take a look at our ultra high time frames and see what this quarterly looks like now that we have that bar officially closing. And you can see that it's actually somewhat of an ambivalent looking bar up top here. Huge wick. There's a larger wick to the downside, right? So maybe a little bit more weight for the bulls, and the fact that they did close higher than where the bar opened. So we do have this kind of wonky looking bar right now, in my opinion. And it's going to be important here from this quarterly perspective to continue to push and get through the high, the all-time high there. Otherwise, we could see this retracement back down this bar. But right now, if we're looking at these signals, we don't see any signs of exhaustion. We really haven't seen anything like that for a very long time, and probably for 6 months now, we haven't seen much of a sign of exhaustion. And so right now, same exact story. And now we're going to have to watch and see how this new quarterly bar develops. We have all of December, all of January, and all of February, and then at the end of February, this candle will then close. So lots of time for this story to develop and change. Our monthly also officially closed at the end of the day yesterday, and as you can see, that is a pretty bearish looking candle. We do have that bearish divergence that we've been talking about for quite a while, ever since we came up to 47.40 there and tested the back end of that trend line. We've essentially been saying that we've got what looks to be a bearish divergence. Now, what we have to see here on this new candle over the course of December here is we need to see this candle stay below the all-time high here, and for this signal that we see right now to look essentially very similar to the way it looks right now. And if this candle does close at the end of the year, at the end of December, and it does have that push lower, we will have a kind of an official bearish signal. Right now, we have to wait for the confirmation and the close of the candle after this bar. And so for now, we have a tentative bearish divergence. It could potentially change. So that's our high time frames, and then our weekly here. And I've been spending a little bit more time since we did have the close on the monthly and on the quarterly. On the weekly here, we do have exhaustion patterns up off the highs. And on the pullback here, what I'm noticing on this new weekly candle is the fact that we do have the argument for a bullish divergence right now. So if the charts stay the same over the course of this week, and this RVI stays below the RVI level of about 65 or 66 right there, then we will have the argument for a bullish divergence off the lows on the weekly chart. Just keep in mind, and if you've been here for a while now, we did have a situation where I kind of spent more time on explaining this, but this price right now, this low, can continue to go lower and lower, and if it doesn't break the lows back from October 1st, and closes somewhere above the lows from October. It closes with lows that are higher than the lows that closed from October 1st, and the RVI is still lower, we will have that divergence. So that's, again, the problem, is we have a lot of space below us here from, what's that low? 4260 all the way up to where we are right now, which we'll just say is about 4560. We have a 300-point kind of open area here where we could continue to push into and still have this bullish argument. So for whatever it's worth, we are seeing it develop right now. Okay, let's get down into a little bit more of an actionable area time frame. Remember yesterday we were pointing out that there was the potential for a bullish divergence off that new daily candle low. However, we had all day for this candle to develop, so it might not actually close the way it looks. And sure enough, just to show you, those lines that we drew on the chart yesterday morning are no longer really valid, right? Because it looks like the low ended up being down here once it officially closed. So we made lower lows on price and lower lows on RVI. So that divergence is not there. However, if we look back to this swing low on RVI, back from about October 27th, you can see that price was lower compared to where it is now. However, RVI has pushed down significantly lower. And like I said, if I had RVI coming down and doing stuff over like this in this area, and then coming up, I would not be drawing this line from here down into here, since there was something in the way. But since there's nothing in the way, and we can draw a straight line from the peak down here to the peak over here, I think that is a valid comparison. And so there is somewhat of this bullish argument just from that point of view. So I will go ahead, and again, we have to wait for this candle now to close and actually see this RVI close maybe like that. So we actually have a peak down here. So for now, there's a tentative bullish argument from yesterday's low on the daily chart. Definitely an official, it's in a signal. We just need to see this new candle close at the end of today and actually have a peak down here to compare. So we'll have to wait for that to happen. Right now, we do have that tentative bullish case. And then as we dial down, what we're going to see is bullish arguments off that low on pretty much every time frame. There's one thing I forgot to mention real quickly here, and that is the fact that the area where we bounced yesterday, the low of yesterday, should be a pretty obvious area in the chart, because we talked about it, and that was the fact that from the October 1st low to the all-time high, if you draw a fib across that leg, we talked about these levels yesterday. We talked about there being 38% retracement around 57. However, I did say we do have those previous swing highs back here. In fact, if we can just kind of bring that up there, that previous area of resistance in the market back at the beginning of September, I thought might be a little bit of a better area to rely on. However, we talked about this. We said we have 45.57 at 38%. We have 4,500 at 50, and the 61.8 would bring us right back into this previous resistance from September 27th area, and the 61.8 would be around 43.50. Look at where the market bounced yesterday. to the tick off of the 38% retracement. All right, so this is just another beautiful example of why I use fibs and why they work. Just comes right down, sells off from 47.40.50 here, sells off 47.40.50, comes all the way to 45.57 and bounces to the tick off the 38% retracement. Doesn't get much more beautiful than that. And again, I have it here on the 4 hour. Here's the whole fib from the lows to the highs. There's 45.57, 38% retracement, and it was right to the tick. So really beautiful stuff from that point of view. And then, like I said, off the previous daily low, we do have a decent bullish divergence down there. So now we have the daily potential, and then we have a 4 hour official signal off that low. What I am noticing is there's a little bit of an argument for exhaustion off the overnight high right now. So we'll have to kind of watch that. But we do have that bullish signal agreeing with what we see on the daily right now that could potentially hold. And then the 60-minute as well, also showing a nice bullish divergence off that previous daily low. A little bit of some exhaustion up off the highs right now, but also a little bit of a continuation pattern off the low right there as well. And then if you look at the retracement the opposite way now, so now that we're bouncing from the 38% retracement of this whole push up, we're now pushing into the leg down from the all-time high. And if you notice, the 38% retracement happens to be 46.2675 or 46.27, and look at the high of the overnight session here, happens to be 46.2875, literally just less than 2 points above that level, and we did get somewhat of a pullback and a reaction from there. So right now we're bouncing off the 38% retracement of the push up, and we're finding a little bit of resistance of the 38% at the 38% retracement of the push down. So just kind of interesting there. Again, the 60-minute agreeing with the bullish case off the lows. There's that bearish divergence that I talked about us seeing in real time yesterday just after the open. So after the open, we did get a nice little push. And then when we pushed into that level that we talked about at the beginning of the pre-market here, we retested it and failed. That was that failure right there. So a bullish divergence from there and from the previous daily high, which was in the overnight session. So this was the regular trading hour high. This was just for the entire day there, including the Globex. So we do have bearish stuff up over in that area, but the continuation pattern off the low, or the reversal pattern off the low here, could end up winning out. Let's go down to the intermediate time frames here, and then we'll wrap it all up here for everybody. So on the 30-minute, one thing that I did do is we talked about the retracement from the all-time high at 47.40 all the way wherever it was, all the way up there, all the way down, and we talked about turning right here at the 38% retracement. Well, if we look at the most local leg, so not the entire thing all the way from the all-time high, but this most local leg, so from the previous daily high down to the previous daily low, we're sitting right at the 61.8. So there's a number of different perspectives here. From the larger perspective, we're sitting right at the 38 retracement. From this smaller perspective of the previous daily high to the previous daily low, this specific leg, we're right at the 61. So these are critical levels, right? And we seem to be sitting right at that level. So getting through here is going to get through that 38% retracement, and it's going to get through this smaller 61.8 retracement. So that would be a good thing for the bulls. We're also seeing that bullish divergence from the previous daily low, agreeing with everything all the way up into the daily for right now. And on the 10-minute, probably not going to clear much else up. We do have the bullish signal from the previous daily low. Also see some agreement with those bearish signals on these tests of these highs from previous days here. So it's a little bit of a mixed bag. However, we do have that daily bolstering the bullish case off the previous daily low. So it's kind of similar to what we said yesterday. First of all, we would ideally like to hold above 12 quarter, and I think I forgot to, no, I didn't. So 12 quarter is 50% of the previous day. 50% of the previous 4 hour, which was that other critical level we watch, happens to be 46.11 this morning. So they're very close together. Essentially, holding above that general area of 11 to 12 there is going to be good for the bulls this morning. Not being able to push through the overnight high and also pulling back below 46.12 quarter and breaking all these retracement levels we have above the previous daily low here will not be a good case for the bulls this morning. So we're going to have to rely on some of these levels we have below us for support, with the expectation that we'll come up to at least test, if not break, through the overnight high and come up to test the regular trading hour high and the previous daily high at 67.50. If that doesn't occur, again, breaking below 12 and 11 here is our first little sign, but we do have some good areas of that could be potential support. So we'll see if we get some follow through from the bulls to continue higher. However, if they cannot hold up at least down from 75 here, which is the last eye level we have on the chart here, and the KP at 64, it's looking like we're probably going to have to zoom back out to the larger picture and take a look at what we have below us. So breaking through 77, horrible signal for the bulls. However, again, breaking lower, 50% would bring us to, and we said this yesterday, 50% would bring us to about 4,500. We do have some decent support in the market back from way back at the end of August there, where we had a lot of support that became resistance, that then became support over here, right around that 4,500. And then our 61.8 again brings us right into, we have an eye level down here. We also have, we do have a bunch of eye levels down there. I don't remember what that one was for, but 61.8 brings us right into that previous resistance over there. And then a little bit deeper, about a 70-75% is right into this previous structure over here. So if this fails, we're looking at some of these deeper levels. However, what we're looking for this morning is a pullback to find a long to see if we could push up and break the overnight high and the previous daily high. If it starts to really sell off, we'll have to switch hats, kind of like what we did yesterday. So have a great day to those out on YouTube. We're going to jump down to our ultra short time frames here, start looking for some trades with our members coming into the open. So have a great day.